Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be here with you on another Monday, talking markets, everything that happened last week, and hopefully a little bit of a look into what might happen this week. But before we do, we're going to discuss the disclaimer, which says that everything we're going to talk about tonight is general in nature. That means it has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of this information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. More important than that. I mean, ASIC will say that's the important bit. For me, this is the important bit. If you're investing, at some stage, you're going to lose money. It's inevitable. Get used to it. I don't say you have to learn to like it, but you've got to learn to live with it. Trading is risky. Ultimately, it's you and not I who's responsible for all the stuff that you do with your money. Tonight, get your requests rolling on the chat window there. You can ask me anything about any of the stocks you're interested in. They could be Aussie stocks, they could be US stocks, they could be stocks from anywhere around the world, or it could be crypto, commodities, currencies, indices, anything I can get a chart on. I'll give you a TA reader on. As far as the fundamental analysis, I'm sure somebody else will be able to do that. Maybe you can call into many chat shows out there on streaming TV. Have a particular lunchtime show that is very popular. We, on the other hand, are not going to do that. We're going to head over to here, the Amy Broker screen, and talk about our portfolio management model. And for people who are new, we've always got new starters. Basically, we start at the top, which is how much capital we're allowed to risk at any one time, and it's dictated by the index in which we're investing, our primary index. Now, if you're only investing in Australia, that would logically be the ASX 200. If you're investing in the USA, I like to use the Nasdaq Composite. You can use whichever one you want, and the rules and the concepts will be exactly the same. Use your one. I use the Nasdaq Composite because it is kind of the heart of risk on when it comes to the US. Another good one would be the Russell 2000, but we might talk about that later. If you've got 50% invested in America and you've got 50% invested in Australia, well, there you go. Each respective index determines your capital allocation. And sometimes we might be fully invested. So all of our capital is allowed to be invested. That doesn't mean we've actually invested it, but we're allowed to. That's our limit. We might say something like take a third off the table. We'll often do that, which means you go 1/3 cash, 2/3 invested. For example, I want to say on that candle there, we said taking a third off the table. Okay, we didn't like what we were seeing in the price action, all of those black candles. If you followed me for any length of time, you know black candles for me equals excess supply. Okay, there's some smart money out there. All of these candles were formed by smart money, not by mums and dads, and they were selling so much that it just overwhelmed the cash that was trying to get into the market. Was there a lot of cash getting into the market? Look at that beautiful big long bull market we had. Of course there was. So that's a little bit of a warning sign for us. Or I want to say certainly by that one there, we would have gone to 50%. And by here, we would have been maximum risk setting. I'm quite sure of it. Maybe even here, you'd have to go back and check the tapes. But if you've been following on for any length of time, you know everything I've just said is true or very close to it because we have a system. And that's the beautiful thing about what we do here. We can look at any chart and know what we should have done because we have a system of rules that defines how we behave based upon how demand and supply interacts and how that changes over time to impact price. I don't think we went, no, we certainly wouldn't have added any risk there. But I think by about here, or certainly here, 100% there, we would have gone back. I think we went back to 50%. And I think, I want to say around there, or certainly there, we went back to 2/3. And that's where we sit now. So you can have up to 2/3 of your capital for the USA invested. That doesn't tell you which stocks to invest in. It just tells you what your limit is. And the limits are designed to keep us safe. So if you kind of think about it, it kind of bookended itself, didn't it? Well, we went to a third cash here, and we were back to a third cash here, almost at the identical price. Oh, I just got goosebumps. It makes me so happy when I see something like that because it means the model is doing its job, and it's doing its job perfectly. So the way my model works is now, if that market kept collapsing, think about it. If we had a 2007 style bear market, for example, what does that look like? Well, we have to go back to 2007, don't we? Which is coming up. Oh, all of these candles, ladies and gentlemen, they all bring back memories, don't they? For me, anyway, because I charted every single one of them I don't know if that's something I really want to admit to. But let's say here, we ended up in something like this, a 50% plus decline. That 1/3 maximum investment would have done us so well. I mean, we would have beat every other fund manager in the world, okay, hands down. Plus, we're able to go short as well. So no doubt, if the market kept crashing this time, we would have beaten everybody. It didn't crash. It rallied straight back up. And that can happen. I wouldn't say it's all that often you get such a V-shaped rally. This was pretty special, this one. I know, look, 2020 was very much V-shaped, but there was plenty of intervention around as well from regulators. Certainly this was a quick one. But as I said, we were able to move back to that 2/3 rating at the same point. So basically, you ended up at the same risk level, but without any of the downside risk. And for me, that's the really neat thing. You ended up at the same risk level without any of the downside risk. And that's the holy grail of investing, ladies and gentlemen. It might not be so obvious now, but the more you trade, the more you invest, the more you realise is that the best investing is about winning in all those up bits, because we're bull market most of the time. That is a fact. Winning as much as you can in all those up bits and losing as little as you can in those down bits. And you're going to be so much further ahead than the next person that wins big in the up bits and then gives it back in the down bits, but then makes it back in the up bits. If we can cut that down bit out, that is a very special thing. Let us head over to Australia here. And you notice, hey, I've spoken already for 7 minutes. I haven't talked about whether I want to buy, hold, or sell a single stock, because that's not the most important thing. This is the most important thing. This is what makes you the big bucks, is your portfolio management. In Australia, I won't do the wins, but similar to the Nasdaq, we're back to 2/3 invested here. And more importantly, for both of them, I can't see any reason not to be in those positions. I think that both of those positions, respectively, are the right place to be. And I think that's the pointy end of the stick. Even though that looks pretty, well, I was going to say it looks pretty scary. It's not that scary, but hey, it's a pullback, a short-term pullback within what now is, again, a short-term uptrend, long-term uptrend combination. And I do think we're going to see demand starting to kick in from here. The closer we get to those trend ribbons, the more demand is likely to kick in. And we saw a very, very mild response today to the falls in the US. In Australia, that's not surprising, given that we're probably okay, but also that futures are up about 300 points on the Nasdaq. So what's that, about 1.5% on the back of something Trump related. I'm pretty sure he said he was going to pause the new tariffs. He is a genius. I mean, you've got to give this guy some credit, because he is very good at making the markets rally. What he does is he announces a really crazy policy, and then and the markets don't like it, but then he announces he's not going to do it, and then the markets love that even more. So that is actually very, very clever when you think about it. Okay, let's do the whip around the grounds and see if there's anything now in any of these other global indices, commodities, cryptos, currencies, bonds, you name it, that would push us off this idea of 2/3 invested. So let us go over to the next point we like to go to, which is the Russell 2000, if I can find it over here. And we are... Oh, well, yeah, see, that's not as good, is it? We probably didn't want to see that coming down so steeply. Big black candle in the mix, but Friday, I think, is the saviour there. And coming in, let us get rid of this, because we don't need that anyway. There's a few lines in there. There we go. Don't need that green zone anymore. You can see I haven't updated this for ages. But hitting that short-term uptrend ribbon and doing a bit of a bounce there, so that's okay. Again, is that a great chart? No, it's not a great chart. It's actually a little bit disturbing. This is the heart of corporate America. These are the stocks that are going to feel it the most if Trump screws up and the economy goes down the toilet. And we've hit, perfectly textbook stuff. Hit that long-term downtrend ribbon. It is a downtrend ribbon, and we've come back off it. Is it enough to push us off our positions? I don't think so yet, but clearly it's something we need to keep an eye on. Let's head over to Europe. That's the French market there. Not ideal either, actually. That's not a great candle there on Friday. I don't look, and then again there. So I don't know if it's something Europe related, but that's far from ideal, that last candle. But hey, there's still a lower shadow, so we're not going to panic. And Spain even experiences some impacts. Is that enough to push us off? I don't think it is. Neither is that, nor is that. In fact, those last few looking quite good. The last two are Chinese indices. Not great, but not a problem for us either. Very, very quickly, just for those who are trading Aussie, the Aussie market, the sectors that are looking better than others. DJ looks okay. not great, but not terrible either. Energy actually picked up. This is a little bit surprising for me. I'd give that now about a 40-60 chance of turning around, maybe 35-65, but it's looking better than the absolute no chance it was a little while ago. Financials are still very strong. Gold has come back. I think I've going to have to concede defeat on this one and say that has surprised me to the upside. Healthcare, neither here nor there, but not great. Information technology, I should say, looking quite good. We're going to get down to resources, a little bit line ball there, potentially changing its long-term trend. We'll keep an eye on that very closely. Property looks quite good. I'm actually seeing lots of property stocks now appearing in our uptrends list. So that's a sector I don't mind at all. Staples coming back, and that kind of makes sense because we're not as risk averse as we were just a few weeks ago. That is hands down the best sector by a long way, and utilities not looking so great either. Let us quickly look at the base metals, because what we're looking at here is expectations of global growth. And obviously, when the markets generally are expecting strong global economic growth, these base metals we would expect to be going up. They'll be in high demand and short supply. And not so much on aluminium. Copper looks good. Actually, that looks good. And I saw the WIRE ETF, WIRE, came up in my scan list tonight. So keep an eye out for that one. Iron ore will get a chart somewhere else on that one. Don't mind that. Nickel not looking great. Lead not looking great either. Tin looking okay. And zinc not looking great. So that's definitely jury out sort of stuff, isn't it, in terms of our global growth indicators. And we don't really count this in the global growth indicator basket because there's just a wall of supply coming out for this one. But that also looks terrible. That's lithium carbonate, if you're wondering. We'll come back here at some stage. But first, let us head over to the trading view screen. Where that's not it, but I will fly that to you all so you can all have a look at yourselves there. And you know, not every week, but most weeks I do this and then I have to figure out. You'd think I would remember how to change it back to the right one. And no, it's not that one. And this is normal. If this is the first time, that's normal. And we're here now, okay, which is the trading view screen. And many of you would have noticed that the indicators changed around because I can't remember who it was that I want to thank. I know their TradingView username, but I can't remember their name. And said, hey, Carl, can you bring that bloody short-term trend ribbon to the front for me? Because when it goes underneath the long-term trend ribbon, I can't see it. And I didn't even realise it was the other way around. It's a very simple quirk of the coding. Depending on which one you typed first, goes to the front or the back. I just had to swap them around. And therefore, you might have got a message from TradingView saying that there's been an update to this indicator, and that's what has happened. So I think it's a little bit more functional. For the newbies out there, you can get access to this trading ribbon. It's very well, you know that because if you're new, this is probably how you came into contact with this webinar. So just send me your TradingView username, and I will update it. In fact, I've got them. If I might have forgot to update them, and I will get them to you tomorrow. Okay, let's kick off here with silver very quickly because I need to catch up some time. Nothing really to see there, but it doesn't look awful either. Short-term trend is roughly neutral, but trying to turn up. Long-term trend is still up. The long-term trend ribbon is doing its job. Candles are fairly mixed. Price action is a little bit scrunched up, but we can see with this candle here, that lower shadow, that candle there, there's a little bit of something building here. I would go so far as to say it's more likely to go up than it is to go down. This one also is getting back to that for me. Okay, I wouldn't go so far as to say that. I'm still worried about this. And I'm still worried about this. I'm still worried about the fact that this is lower than this. And in theory, we haven't proved this is going to get through this yet, have we? And this trough here is lower than that trough. We're lower peaks, lower troughs. And you can only get that when there is at least some element of building supply and at least some element of diminishing demand. And these are not ideal indications for going long. And that's as simple as my model is. So I think as I've said, I think we're in more of an equilibrium market here. I have never said I think gold is going to crash. I think that's a silly thing to say. I have said things like, well, it'll probably come back to the long-term trend ribbon, like here, and do some time and then go up and continue its bull market, possibly. But I just think more equilibrium than not. But that doesn't mean there aren't still some great ASICs gold stock charts out there, and they have still been coming up in the scan list. So despite I might have a bit of a view on gold, that doesn't mean that will then flow through to what I do and what I don't put in those lists. Those lists, if it's good, it goes in. It's as simple as that. Copper, actually, as I said, copper in London, that was the first chart we looked picking up via the global copper stocks ETF on the ASX coming into the list, and a little bit of a push there off the long-term uptrend ribbon. I'd love to see, because we're moving into a bit of a supply zone here, aren't we? Okay, this is a point of supply. So we want to see how we respond to this supply. So the idea is that a previous zone of excess supply may well act as a zone of excess supply in the future. Okay, it's latent supply up there, and it's created because people who are going long here got stuck in the market. And some of them will want to get out because that point for them represents break even. Not all of them will, but some of them will, and that it equals latent supply. And if that latent supply is sufficient to impede the demand, which we are so clearly seeing coming to the system, then we will get equilibrium. At best, prices will go sideways, or we could see that supply overwhelms this new demand and we come back down again. Now, one of those three things is going to happen. It has to be the case, right? D greater than S, D equals S, or D less than S, or S greater than D. So I think it's worth keeping an eye on. Because of that last white candle, iron ore flamed out, nothing to see there. Uranium, I wrote about this tonight in my evening wrap. It has ticked up, still quite a bit of work to do, but unequivocally now that long-term downtrend, other people will call it a bear market, that's what I call the long-term downtrend. That long-term downtrend is over, and we're just waiting to call it a new long-term uptrend. Other people would call it a bull market, but certainly we have a very strong short-term trend there. You can see the light green ribbon and higher peaks and higher troughs bashing in to the exactly where. That's how the ribbon works, everybody. It's doing its job for you, isn't it? Thank you, trend ribbon. Natural gas, neither here nor there. I actually don't mind looking at the line charts on these. Let's go back to the candles. And nothing doing there. Let's head over to crude oil. Nothing doing there. And Brent crude, nothing doing there either. The two coal contracts, nothing doing there and nothing doing there. How about that? Let us, it's a little bit disturbing because obviously we'd like to see these all very strong if the global economy is in good shape. For the new people out there, I produced for you to watch this every night. There's a little bit of fidgeting around to make it happen, but there is a link in your welcome email that tells you how to fidget, okay? And you can get access to, if you follow me on Market Index, you know I do daily scans. It's called ChartWatch ASX live scans. And the watch lists that I print in those articles are actually here now for you. Okay, so only the webinar crew gets access to this. Nobody else has them, and you can then just tap down instead of trying to type codes out from the screen on this side, and you type in codes. If you try to do it on your phone, it would be impossible. I've got the list for you, and you just go through. And these are all what we say plus 1/3. So I'm happy to add risk. If you've never traded any of these, it would be an initial 1/3 setting. If you've got them, then it's a hold as well, because we assume therefore your FRP, full risk position, or if you feel like adding more because that's the best opportunity you have, then you would be adding more to your existing risk position. RP stands for risk position. Risk position just means skin in the game. And we go down the list and go down the list. We'll look at some of these as we go, but you've got the uptrends there and the downtrends. Also ANZ coming up on that. But I'm looking here and I can see that my trend ribbons are in a slightly different place here on that ANZ chart, and I'll need to figure out why that's the case, and there might be an update pending. But it will be the case, certainly, that, and this is nothing I can do, different platforms calculate their exponential moving averages differently, and there's nothing I can do about that. So I could look into it and the code will be right, and it's just one of those things. So everything I do is based upon AMI broker. We should also try to remember that as well. Let's go back here to auto, and we're going to go. Actually, no, we're still where you are. So let's stay there. Where I was heading was over to indices and bonds. That's where I was going. Come on, Carl. I wanted to show you one thing here which caught my eye. Was it that one? The Hang Seng Properties Index, that's starting to tail away, isn't it? That's not something we want to see. Apart from that, we'll look at the long-term US bond yields, which have been heading up. So we call this an increase in term premium, basically where it's a steepening yield curve, but not necessarily, and steepening yield curves aren't that bad because generally markets will be in that, will create that scenario if we're thinking lots of growth down the track. But on the odd occasion, this is just how economics works, unfortunately, ladies and gentlemen. You go, oh, that's normal, that's normal, that's normal. But in this situation, that's not normal. This is normal. Insert your new normal. It is just the way it works. And you'll often hear me in these sessions talk about these inflection points, right? Where I'm saying this is normal, this is normal, this is normal, but we'll pass this inflection point and then this will be the new normal. Okay, so we're in this new normal now where there is this pervasive expectation, two things going on. Pervasive expectation we're going to have higher inflation as a result of what President Trump is doing, but not just that, a lot of his other fiscal policies, and that's feeding into your longer term rates and not your short-term rates, because the expectation is that the Fed will probably continue to cut rates to try and not ruin the US economy, or try to not let Trump ruin the US economy. So we've got short-term rates being kept artificially low and markets responding very sensibly to some of these longer-term problems. And the second issue is, I guess, de-dollarization trends where global investors don't like what Trump's doing. They don't like him. They don't like his volatility more than anything else. They probably couldn't care less about him, but they don't like the volatility of his policies. They want certainty because they've got a bunch of risk-free money over there, or money that they think are in risk-free assets like long-term US treasuries. So they're selling those treasuries. We had a 20-year auction a little while ago that wasn't as well received as the market was thinking. It wasn't terribly received either, but it wasn't as well received as the market was thinking. So we're seeing some of those securities being sold off for that result. What's it going to do to the markets? It's not ideal. It's not ideal, but it's not end of days sort of stuff just yet, okay? But we don't want to see this. We don't want to see this keep going up. Really, we don't. It'll get to the point where the market will start to respond. So hopefully those long-term yields can stay down. And as you can see, short-term yields have gone up a little bit, but they're still below their long-term trend ribbon. I think that's it for the big picture stuff. I like the big picture stuff. Do you like the big picture stuff? Let me know. Because I can skip it at the start, but I think it's good to have the big picture stuff before we do the small picture stuff, which is coming up now. I got a few thumbs up there, so that's okay. And it's just my take on things. You know, I have been in the markets for a little while. I do have a degree in economics. If you're worried, I am classically trained as well, so I do kind of know this stuff. Let us go to the AMI Broker screen, and we're going to kick off with your offline requests. And for people who are here for the first time, if you can't make it, that's fine. Send me an email, Carl@Live Market Analysis, and everybody gets their questions answered in one of these sessions. Okay, that's the good news. Tell me what you want to talk about. It's very important you don't do what Craig's done, because Craig, and he does it every week, Craig, he sends me a couple of things he's interested in, and he doesn't tell me what he wants to do with them. Okay, so I've just got CHN, and then the next one's LYC. I know what's going on with LYC, but I'm guessing he's asking about this one for, what is it, an aggressive entry, a turnaround setup, who knows? They're quite often mistaken in this webinar. But we have three types of setup. And when we get to them, we'll talk to the other ones. So right now, this is the closest to a turnaround setup, as the name suggests. It's a stock that has been going down for a long time, probably, and is trying to turn around. And there's a few things we need to happen for it to qualify, and therefore for me to want to talk about it. Okay, so I might say to you, look, I don't want to talk about that because there's nothing going on. We'll come back, we'll look at it next week. And if it's meeting more of the criteria, we'll be more excited about it. But until then, why are we talking about it? Let's go talk about stuff that we can trade based upon my model. This isn't about just buying and selling just based upon anything. This is about buying and selling based upon my model. Hey, it's my webinar. You can go look at any other webinar you like. But for us, for this to qualify as a turnaround setup, we need to have at least a short-term uptrend. We don't have that yet, okay? We'd like to see rising price action or demand side control price action, which is very simple. Rising will happen. There we go. Rising peaks and rising troughs. We talked about this earlier, where we talked about building supply on gold because we had falling peaks and falling troughs. Okay, here we've got building demand. Okay, the only way you can get higher troughs is that demand is chasing prices up the screen, and supply at the same time is running away. Okay, do we have that on screen? I think we do. And I might draw it with a different tool here, but we have, every time we have a higher high and a higher low, from candle to candle, that starts a new short-term uptrend. Then eventually we might have, at some stage, a lower high and a lower low starts the next downtrend, and vice versa, and that's the price action here. So officially, we do have rising peaks and rising troughs, so that is a tick. We're still missing the short-term trend, and we need to see at least an amber over here. Okay, so we need to see an orange ribbon. Okay, so what does an orange ribbon look like? Well, obviously it looks like that, and we don't have it yet. So this is not a turnaround setup. We don't need to do any more work on this. Oh, but Carl, let me tell you about Chalice Mining and all the wonderful things that they're doing. I'm sorry, but I don't care. Okay, I have no interest in that. All I care about is stuff meeting my criteria, and this isn't. There's an aggressive setup. It's not dissimilar from the turnaround setup. We still need a short-term uptrend. We still need to see amber. We still need to see rising price action, but we need to be far enough away from the long-term trend ribbon to have at least one-to-one reward to risk on a trade. We'll talk more about that as we go, but we clearly don't have it here because we're in the ribbon. How can we have one-to-one reward to risk until we get to the ribbon when we're actually already in the ribbon? So no, and the reason why we don't want to trade this is because the ribbon, like, oh, Carl, just go long here. Like, this is a great stock. Trust me, it'll be great. Well, I don't know. Maybe. But I do know that it has a lot of trouble getting above this bloody ribbon. So that's why I wait for it to occur. So this one is a complete pass for me. I have no opinion on it. My model has no opinion on it, so why would I have an opinion? Let's go to Lynas, where I do have an opinion, because this is more of a turnaround play. I've got a bit of stuff going on here. So let me zoom that out. We do that often here also to get a nice clean chart, don't we? So Lynas has been all over the show, as it tends to do. Rare earths, exciting. Rare earths, not as exciting. Lynas is too expensive. It has its naysayers. It's coming back. It's hit the long-term uptrend ribbon here and here. The long-term uptrend ribbon is doing its job. We're still sort of neutral on the short-term trend, okay, but it is improving, clearly. Trend ribbon has turned back up. I would say in the next couple of days, assuming it doesn't go much lower at all, it'll be back to light green, and that'll be very healthy. In terms of price action, I am quite certain that we can see rising peaks and rising troughs. And you might say, hey, Carl, there's only one peak there. I can't see a second peak, so how can you have rising peaks? Well, by definition, if we are above, let me grab that one and put it down here. So if we are above, ooh, what are you doing there? If we are above that peak, wherever that next peak forms, wherever it forms, let's say it forms tomorrow, that peak must be above this peak. Okay, as soon as you trade above this peak, the next peak is going to be higher. It's inevitable. So we don't need to see the next peak to know it's going to be higher. It just is. We can see we've already got rising troughs. There's no doubt about that one, and that one comes down from there to there. So we're ticking a lot of boxes. Then we go to the candles. I didn't bother getting as far as the candles on CHN. I didn't need to, because none of the other criteria are met. So here I wouldn't say we're very close, but we're closer than before. And now we're going to look to candles, because this is okay. This is okay. It's fine. It's going to be green literally next candle or next. This is fine. The price action's good. The candles, I think, are actually pretty good too. I mean, I love that candle. I think that is a ripper candle. That is big. It's white. It finished on its high. It didn't remove. You wouldn't say it removed a whole heap of volume here. Okay, below average volume. Don't know. It's hard to say. We won't know until we see a little bit more price action volume as to whether that's just, well, there's not much supply left in the system. So there was lots of demand. It just didn't hit much supply. That's why there wasn't much volume. But we saw very motivated demand, or maybe there's some supply somewhere else. I think that's probably the more logical option here, don't you think? That the supply is there. It's just not where it's just not at the price yet. Or Lynas isn't at the price where the supply is going to kick in. You know, supply is going to kick in there, I think, and probably in here, just at the top of that big black candle, because I know there was lots of selling there in the past. There may well be selling there in the future. I don't mind it. Look, I actually ran it today as a plus 1/3. I think it's a little bit of a specky turnaround / continuation play. Continuation, obviously double green. We're not quite there yet. I don't mind it. I think you could do a lot worse than this. Is this going to be the best one? I don't know. We'll have to keep looking tonight or head to the Uptrends list, and there are plenty more in there. But what we should do on each occasion we do have a potential setup is to give it a score out of 10. And I want to ask for your votes this time around, because I lost all the requests last week when we did this. But in your head, what is it? Is it 5 out of 10? Is it 6 out of 10? Is it 7 out of 10? And for every setup, you should be trying to rate it out of 10. And then when you get to the end, well, obviously the 9 out of 10s and the 10 out of 10s and the 8.5 out of 10s maybe, if you don't have many opportunities. 7 out of 10 if you're slumming it, but probably not. I mean, maybe it's a 6.5, maybe it's a 7 out of 10 for me. So, and I know this might annoy people, but I just want to get rid of that all of that drawing. So I just want to point to the last candle. And the last candle is good, but it could be a lot better as well, isn't it? So maybe it might be a case of next high close for some people. But look, as it stands, if you wanted to, because you've got some affinity with Lynas, right? I did go plus 1/3 FRP. It's in the list. It didn't make feature. But it was in the broader list. Okay, that's Craig done. We're going to do Mick now, DRO. And Mick's asking about minus 130. So Mick's on the trade. And Mick is asking minus 1/3. Mick, I reckon, and I think a few other people probably, as soon as I zoomed in, probably said, I reckon there's your first third. Where's your second third? Yeah, got a few thumbs up. There's a few thumbs ups there. So that's your first third, that big black engulfing monster. Maybe there, if you didn't pull the trigger on that day, okay, this isn't an official trough, right? So what we're looking at here is this is not an official trough because we did get a high and a higher low, okay? But certainly there's a little bit of an intraday dink there. So these two candles together, we've got supply, and then this is the key. This is the critical candle here. So this is the one I want you to just memory burn, okay? In these situations, because it can get you out a lot faster than waiting for something like that, and certainly waiting for something like this, which is where Mick is right now. I think Mick's, and I don't know, Mick this might be his last third. I don't know. But if this is your first third, I think you're a bit behind the curve, okay? So this candle here, so supply, and then this is the rally day, or the attempted rally day, right? How far did they get? Like, they certainly didn't get halfway up this monster, and they certainly didn't take out this serious one here. And then they got beaten back down again, right? So that in itself is quite disturbing. That confirms that, and that certainly confirms that. I reckon, for me, that's your second third, and I think today is your final one. Well, not today. I think today's confirming it, and tomorrow morning, or if you went at 10 to 3, 10 to 3, 350, 10 to 4, you could have got out today before the close. I like that strategy. So if we're dealing in getting out before the close, checking your stocks from about 3:30, you don't need to check the whole market, just your positions. There might be a few you think you're getting into, a few you're getting out of, and that's the way I reckon I would do it. So we're going to find that there's a little bit of discretion here inevitably, but it should make sense. If it doesn't make sense, let me know. That's the thing I'm most concerned about. Is that okay, I get it, and you'll get better at it. Trust me, you'll get better at going. Yep, and you won't need me. You'll just look at the candles and go, yeah, I'm not going to muck around with this. Yeah, I don't need to be here anymore. Okay, so I reckon to answer your question, I reckon with ZRP on this one now. Okay. And we might have the most almighty big white candle. And that's how Droneshield works, isn't it? It's bloody frustrating. So could be, but I don't care. I just don't. The not being in it when it goes up is not the thing that scares me. Holding this all the way back down to zero is what scares me. Okay, and I will not let that happen. So you just have to get your priorities right with what scares you. I think a lot of mum and dad investors, they fear missing out, whereas I fear losing more than I should. Okay, let's go to Mick's second one, FHE, which is also asking for a minus a third. You can see this is where we liked it here. So that one there was the in, and it just hasn't worked out at all, has it? It's just one of those things, unfortunately. A little bit sketchy, but it was as valid as anything else. Okay, when I say sketchy, it's not been it's not that we wouldn't do it, but we go into these knowing full well what we're getting ourselves into, okay? This was actually a pretty good candle. So was this. But as good as those were, and you've got to remember how you feel when you see those candles, you're feeling optimistic as well, right? And then the market gives us this one, and this one. It's like, it's hard for even the most faithful traders there to hang on. So I think in terms of pure demand supply showings, this is more of an equilibrium trade now, isn't it? Okay, and that short-term uptrend ribbon is probably going to go amber sometime pretty soon if this doesn't perk up really quick. So with it being neutral now, I can't see a reason to have long side risk on this. And yeah, with the combination of all these black candles, the lower peaks now, we're closing really at this trough. Kind of what are you waiting for? I think I'm leaning towards a ZRP here, or at most, if you have to, because it's a story you like, plus 1/3. That's kind of where I am on this. And this is always stuff that how I would trade it. This, you guys do whatever you have to do. That's all we're talking about here. All right, so Mick's asked for an aggressive setup here, and he might be right. He's not I should say he might be right in terms of 1-to-1, because that's really the only thing that's working for it is whether we can make 1-to-1 between there, because we know at the trend ribbon, we're going to have some problems on the way up. The trend ribbon supports, on the way down, the trend ribbon resists. Okay, so why would you do a trade where you stand to lose more than you stand to gain? Well, that's not the way we do things. Even at the casino, you get, some of the games are 50-50, right? So we don't want to do that. So if that's our upside between the current price, in fact, the current price is not there. The current price is actually down here because it's a black candle, so it's actually closed there, to be fair. But even then, you wouldn't get in on this candle. It's impossible for you to get on this candle because it's a black candle. It's not a demand side candle. So the next candle would have to have a high close, which means it'd have to close up here, wouldn't it? So that's our upside. And then if we look at, we look for interactions with points of demand to determine our exits, all right? And I would put to you that we'd be well out by the time it gets back all the way back in here, but that is really an important point for us, isn't it? So in terms of our upside, that's our upside. Oops, that's our upside. That's our downside. And therefore, I can't see any point doing it. Do I need to look at the candles? Do I need to look at the ribbons? I will, because I could have kiboshed this trade a lot faster. Okay, so that's probably where I should have got instead of where I started. This is where I should have started. Mick, no, this is not a turnaround setup because, quite simply, that's not up. That's not an uptrend. So, because that's not an uptrend, and this is actually, it's not a turnaround setup because that's not an uptrend and that's not amber, but it's not an aggressive setup because that's not an uptrend. And that's not an amber as well, isn't it? So there you go. It just seems that every week there's always someone who somehow, as much as we talk about it, forgets the rules of a turnaround setup, but such is life, isn't it? I guess I'll just keep reminding you until everybody's got it. Okay, that's Mick done. Let's head over to the online request. Thank you for being very, very patient. Adonis has got EVN, still looks very strong. No complaints here. Picture of health, again, wasn't a picture of health not that long ago. How would I have traded this? Great case study. For me, I can't hold a full risk position there. But I think given the pedigree of the trend, hopefully you'll agree, given the pedigree of the trend, I think it's too drastic to do any more than that. Let's make that a colour we can all see. How's that? That's getting worse. What about that? How about we just put it off the candle? There we go. I think that's the first step. Okay, do not ask any questions. Knock a third off and see how you go. All right? Because don't forget we closed here on this day, and then we closed here on the next day. That is a pretty decent one. Could you have done 2/3, perhaps? No, I think it's a very strong trend. I reckon. I was going to say, would I have put that risk back there on that day? No, I think I'm concerned about this now. Because this is so severe, I'm concerned that there's going to be a lot of supply up there. Because don't forget, and this is how you know, all right? The bigger the run, And the bigger the reversal, the more people, just think about how you feel when you're buying all the way up to here, right? And then you get that big reversal. Oh, shit, I bought at the top again. You will refuse to get out here. You won't 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 get out here. But if you can get back to break even, you're out of there. You know what I'm saying? So what it does is it creates a lot of latent supply if we get back up to that level. And because it's such a severe reversal, I believe the greater that supply will be. We certainly saw it there. But here's the other thing about supply. Nothing lasts forever. And the more times you can sort of hit that supply and weaken it and take out those traders, the more likely you are to be able to get through it. And that's what we've seen. So that's actually a really powerful move. I think this is a day where you can add that third back in. And I want you to seriously think about why that's the case. Why that day? Why is that the first day after all this stuff that I think you can? Because I think that's the day where we're close enough to this point of supply, and I think we're still close enough to that point of supply, and the emphatic nature of that candle, because don't forget it closed down here, and then it's gapped up, came down tested. There was some supply because of this thinking, oh, maybe gold's not going to go again. Even you've got positional traders taking advantage of those higher prices. Then what happened is a wall of money came back in and closed it near the high, closed it near here. I think closed it near here. We've had that first test. I think that's the day that you could go a third. And then today, not this day, because of the upper shadow. You might say, that's being a bit pedantic, Carl. Well, no, I don't like the upper shadow because we are sort of saying there is some supply there. And then today's the next day. Because, again, we've got a bit of a gap. Could have closed a little bit better, but hey, we've also closed above the top. Okay, so I think these are... Oh, somebody's shouting at me. Shouting at me that should be minus a third. You're right, that should be minus a third, not plus one third. So I think that's how we're trading this one. Let's go to MP1, which I still think looks very good. Okay, we've talked a lot about getting out, haven't we? Minus 1/3. Now, I wish I had... We always need 2 message boards, don't we? Or I could do a survey. Oh, no, I couldn't be bothered. But maybe I'll investigate how to do them, like a yes and no survey, because I want to ask you the question, and for even people that are new, you're kind of getting some idea of how I operate with these exit signals. What about these candles? Are these enough? We've got 1, 2, 3, 4, 5. Are these enough to take us out of a trade? Are these enough to lighten our risk, take some off the table? What do you reckon? Maybe do the thumbs up or thumbs downs. Let's do we can do that. We've got emojis. What do we think? Are those enough for us to take some risk off the table? Perry saying yes, Peter saying yes, David saying no, Donna saying no. And this is how it works, isn't it? People are going to have different opinions. I think we're about 50-50. I'm glad we're 50-50 and we weren't all guesses. No, I don't think so. I don't think they're enough. And you might say, oh, Carl, you've got the benefit of hindsight. You can see. Yes, I can, but I don't think these are enough either. I think they're all pretty small. They're all pretty straggly within the context of this trend. So I think we're okay there. I mean, even all of those, none of those are so terrible. So then you're relying on lower peaks and lower troughs and some other price action signals. Let's go back and let's see if we can find that's obvious. That's obvious. They're obvious one candle signals, right? So just getting off, wow. And I want you to think, ladies and gentlemen, how many people, and it might have been you, profit downgrade, whatever it is, stock was 13, now it's 10. How many people jump in on this day trying to get a bargain, thinking it's cheap, And what you did is just bought in the face of that giant black candle that the professionals are selling. These are all good examples, I think, of candles that you really have to act upon. I don't even think that is. Maybe in combination with that. Certainly in combination with that, and certainly in combination with that, because we can blend candles together. But I don't think any one of those by themselves is sufficient. Certainly that is. What I'm trying to do here, ladies and gentlemen, is get your eye in. Okay, I want you to see what I see. Certainly that is. Now, with all of those candles in mind, let's go back to here. What do you reckon now? Can I get a show of... No, maybe I've convinced you, or I don't know. Let's do the show of thumbs anyway, for argument's sake. And if I haven't convinced you, don't change your thumb. okay? If you still think that's the place to get out, or those candles are enough, okay, I'm probably convinced a few people, but I just want you to have some perspective on what would constitute like a candle that, one candle signal takes some risk off the table, and even if you look at those as a cluster, they actually didn't make very much progress, did they? So I think we're okay. That's the bottom line here on Megaport. I do think we're okay. Let's put everything else into perspective. I mean, that's incredible. That's turning up perfectly as well. We had a little bit of a wobble here, but still got that back pretty quickly. And there is definitely a predominance of demand side candles. So there's a lot of white on that screen. I don't mind that, and I'm very happy with that. I think today's candle's even fine as well. Where are we in terms of potential big points of supply that we really should keep an eye on? And we're just looking at these as points where we might encounter some excess supply, some candles that we don't want to see. I think that's miles away. I think we're fine here. I'm going to go so far as, look, today's candle, it could be better. So I don't know if it's a plus 130 today. I can't remember if I shortlisted. I might have anyway. Look, let's just do that. Next high close, plus 130. NHC, everybody, stands for next high close. And all that means is a nice, strong white candle that closes on its high. It doesn't have to be white, but it just needs to close on its high, isn't it? So, what does next high close look like? That looks like that candle, or it looks like that candle. Let me find one that isn't white, but it's still, there you go. That's a next high close right there. Look at that one. That's a next high close. You get the picture? So next high close, then we could add risk. So if you see me type something like NHC plus 1/3, that 1/3 just means we're adding risk. Now you can add as much as you want, but my model is always a 1/3 in, 1/3 out model. Okay. Let's keep moving, because I'm talking a bit more tonight to try and help the new people who are on board, and hopefully the old hands as well are getting some benefit out of that too. Adonis will do the rest of your US ones when we head back up the list. Terence has got some stuff there about the AI transcription service. I'll let you read that in your own time. Sudesh has mentioned Wire. I mentioned it also. This is a turnaround setup here. In fact, there you go. I mean, this just shows why I would put this in tonight's list, because it's meeting the criteria, everybody. Turnaround setup. We've got a light green here. Okay, step number one. We've got amber here. Okay, it can't be pink. It can be amber, it can be green, but it can't be pink. We have hit the long-term trend ribbon. We've pulled back, and now we've moved above it. We've got rising peaks and rising troughs. And I reckon it's less relevant with an ETF, because we have market makers that do silly things. But I still think we've got a predominance of demand-side candles, and therefore, yes, this is a valid setup. With these, always, inevitably, they're turning around, so we're going to have a bit of a supply zone to deal with. And ideally, and this will be a deal breaker for me if we cannot make it, but we want to have at least 1-to-1. And if you remember what we did before, we said, okay, well, that's our upside if we're getting in tomorrow, around about the same price. We don't know where it's going to open tomorrow, but assuming it's around about the same price, that's our upside. So let's change that colour. Let's make it green, perhaps. Green for winning, green for up. Does that make sense? I guess it doesn't matter. And then we're going to change it. Grab that one, and it won't make sense just yet, but it will in a second. So if we're getting here, this is measuring our downside, and we're going to the last trough, where that last trough is, and just below it, because we're never going to get out at it. We'll tend to get out on the break of that trough, the close beneath it. So that's our downside there, give or take. Okay. Is the green box bigger than the pink box? Yes, it is. Therefore, we have a valid setup with acceptable reward risk, and therefore this is definitely an option. Give it a score out of 10. Write that down. When you get to the end, if it's in that top list, then you can take it. Generally, I like to have a mix of continuation setups, turnaround setups, aggressive setups if I can find them, and therefore I might take a 7 out of 10 turnaround setup over an 8 out of 10 continuation setup, simply because it gives me a bit more diversification in the types of setups. Okay. Yes, I won't write it on there, but yes, for me, plus 1/3 on that one. For you, Sudesh, Hayden, Scott, Yojee. Oh, okay, I don't know this one. Yojee. Okay, these are the little chocolate things. Wow, this thing's had this very checkered past, hasn't it? Look at that. That is one hell of a downtrend that it's come out of. And the only reason why you haven't got this from me yet is because I'm guessing it hasn't met my turnover filters. And we can see, if we go through here, minimum turnover filter is 0. So it's just little, it's small, it's a trade enough for my filter to pick it up. I tend to want at least a couple of $100,000 a day. Something like, if it's not 200,000, it's like $250,000 a turnover a day on average over the last month. Just to make sure it's liquid enough for me and you all many times to get in and out. So that's why I haven't seen it. Hasn't been on the list because it's not good. It's not on the list because I haven't seen it. But you can see it's got all the hallmarks. Initially, everybody, I've a turnaround setup around here. There's definitely a buy signal there. Maybe there, just a little bit of upper shadow, not terrible. I don't mind that. That's fine. That's very good. That's good too. So there's a few buys. This is when the market crapped out. Okay, if you took some off the table there, I wouldn't blame you, but you probably would have had to get it back in pretty quickly. Okay, everything crapped out here. Everything did. So it's a perfect example of how my model works. Right now we're double green, so this is a continuation setup. Obviously trends are continuing. I can't fault it in terms of two trends, price actions, perfect. Just a wall of white candles there. So I've got a bunch of thumbs down. Why is that? Bunch of thumbs down. Maybe there's a technical issue at your end I'm not aware of. If somebody can type it in. No, I don't know. Now we're back to thumbs up. Okay, maybe it was a localized problem in a particular postcode. The only thing that I don't like about this is the candle at the end there, and it's a supply side candle. So it just means that, hey, over the next day or two, maybe three, you might have a little bit of supply coming into the system. The chances are, based upon everything else, is that at some stage demand will mop up that supply. People want to take profits. That's okay. We won't begrudge them that. A lot of people made a lot of money, so some of them will get out. If there's plenty of demand in the system, they'll soak up those short-term profit takers because there'll be still lots of money thinking that this is going to be 60 cents. It's going to be 80 cents. It's going to be $1. But we'll wait and see. So the great news for this one is we've got a lot of ticks in boxes. We're just waiting for that final box. And I can say, therefore, really all we're waiting for is the next high close to add a third. If you have it, there's nothing there to tell me. This is the other part of it. That's why I'll write FRP beneath it. There's nothing here to tell me that you need to manage your risk at this stage. That last candle isn't ideal, but is it one of those one candle, take risk off the table events? No, I don't think it is. Okay, we want to try and stay with these trends as long as possible. Okay, very interesting one. Kids input. What does that mean? Sorry, kids input. Kids ran into the room. Don't know. I think I've answered your question there, Hayden. Hayden's also got MTM, which is not that one, but it is that one. That one's still fine. I saw that today. A little bit of a pullback. That candle. Like Hayden, if you're going to have a pullback candle, if you're going to have a down day, that's the candle you want to have, don't you? That's still fine. So yeah, no troubles with that. I don't need to talk about everything else because I think we've covered everything else, haven't we? We're going to go next high close, certainly. We're going to go plus 1/3 on the next high close, and if you've got it, then FRP. That candle is not a candle I would be looking to manage risk on. Okay, Rapalm, you've got some US ones. We'll do those on the way back up. For the new people, we do US stocks at the end. So I scroll down to the bottom, and then I'll work my way back up to do the US ones. In about now, I'll tell you that we please don't put any new requests in because I'm going to stop at Andrew's question there. Before I work my way back up, because we can't be here all night. Okay, typically sessions will go for about an hour and 15 minutes. Okay, we're going to go to Robert. Robert's got FRS, or shorter if you couldn't be bothered hanging around. You could leave any time, of course. Okay, that last candle. What do we think? Let's do thumbs. A thumbs up, thumbs down. Is that a risk event? Is that a candle that we would take some risk off the table for? Now, don't just look at the candle. The candle's important as well. Have a look at something else. Let me just make sure. Well, it's not the first time we've been there, is it? It's not the first time, but it's the first time in a very long time. And I would put to you that there'd be a bunch of people in at 5 cents that are probably looking at 10 cents and rubbing their hands together. So the location of this one is a little bit more relevant, I think, for me, and getting it closer to that one candle risk event. It closed a little bit off the low. It wasn't huge, was it? And I know where these are discretionary things, aren't they? And I often say, look, it's not a hard and fast black and white rules-based system, a lot of it's common sense, okay? You'll know the rules, but you'll have to use a little bit of discretion sometimes to apply those rules. I'm going to go with no. I'm concerned that we're at 10. If I saw another candle tomorrow, shadow pushing into 10, low close, I'd probably, I'd knock a third off just as a precautionary measure. And ladies and gentlemen, that's what we're talking about. We're not talking about selling everything. We're just taking a third off the table just as a precautionary measure. We're still going to have 2/3 skin in the game. If this thing doubles to 20, we're over the moon, all right? But if it pulls back to 6, at least we got some out pretty much at the top. And the benefit of that, ladies and gentlemen, and it's almost irrelevant what it does for your P&L, that getting 1/3 out at the top, if it starts to peel off, it's what it does for you up here that matters. And that's what I learned, okay? It's okay for it to go to 15 the next day, but if it goes to 5, getting that thing out the top, it puts you in a better frame of mind to do all the rest of your trading. So I'm going to go no on that, but watchful. So just FRP for now, but we don't want to see a follow through to that. I think that's the big question mark. So if we were to see something that looked like this, then the combination of those two candles would force us to act, I think. And certainly if you saw something like that, you'd know what to do. So FRP for now. Let's go to Robert's next one, which is GHM. We'll pick up the pace because all I need to say here is nothing needs to be done. Next high close, and I think you understand why, because of all the stuff we've talked about. That tends to be how these sessions go. We do a lot of foundation work at the beginning, and then it tends to get easier towards the end because we've warmed ourselves up, haven't we? Let's go to TRE, which is Robert's final one here. Please try not to put in more than 3 if you can help it, okay? You know, that way it gives everybody a fair go. And Robert, I'm loving yours because I'm very easy. I don't have to do anything at all. This is a great looking chart. Oh, I know this one, Toubani. I've been running it in my watch list, haven't I? Look, the only thing I'm worried about, and this might lose at a point out of 10, is this up here. But I just think that candle from might have been Wednesday, or was it Thursday, is just so strong. It's just telling you that people aren't afraid of that supply zone anymore. So for me, look, even today's candle I think is fine. I'm happy to go plus 1/3 or next high close, whatever you prefer. You know, if you feel more comfortable going next high close, wait for it. But either way, of course, it's FRP. Let's go to thank you, Robert, for putting in your little plus 1/3. It always helps me. And, you know, tell me what you think you're doing. You're going long, you're going short. Tell me what setup you're looking at. That tells me that you know what you're doing. Okay. Sue Scott, hi Carl, hope you're well. I am well, Sue. I'm very, very well. Can I please get your feedback on BOE? I like BOE. So there you go. You can see we've done a bit of analysis on this. And we've talked about how influential that long-term trend ribbon can be. And this is why we wait till we clear it before we go long. Imagine if you're Carl, Boss Energy, it's uranium stock, it's going to be fantastic. It's a bargain, it's cheap, it's going back up, you better buy it. I don't think so. And same again. But here, this is the day that I put it in for the first time, I think. ChartWatch has been going since May 23rd last year. So you can see that's roughly from here. So unfortunately for Boss Energy, ChartWatch didn't see all of this good stuff because it just wasn't doing ChartWatch, ASX scans. And I think it went in, the first time Boss Energy went into my scan list was probably on this day here. And that was for a short. And then I got several shorts. And then the first long is here. So I reckon I nailed that, just between you and me. I reckon I freaking nailed it. And today, it didn't go in today because of the upper shadow. But we certainly had a third there and we had a third there. So look, I think Boss Energy is fine. Is today a species-ending candle? No, it's not. It's just not a great candle. And everything else is fine. And that's what you've got to remind yourself. It's like, well, okay, it's not a great candle, but everything else is still very strong. So for me, it's a hang in there. I'd still be next high close. Would be still plus 1/3 if we saw it, certainly because of everything else is fine. And then FRP still. And I don't know what's going to happen tomorrow. That's the other thing you hear me say all the time in these sessions. I can't tell the future. If I could, I wouldn't be sitting here talking to you. Okay, I'd be in the French Alps somewhere on my push bike climbing those mountains, which is hopefully where I can retire to any day now. Now let's go to Boss, people say, Carl, why would you want to ride your bike up the mountains in France? Why wouldn't you go sit on a beach somewhere? That's not my gig. Let's go VBTC. Any other cyclists out there that know what I'm talking about? I don't know, it's pretty rare breed. Some people like cycling on the flats. I like cycling up mountains. Let's go to Bitcoin. Looks fine. We'll look at. We didn't look at Bitcoin, so let's do that now because there's no point looking at this. Don't do any charting on this. It's irrelevant. That is, don't waste your time. A complete waste of your time looking at that. So we must go back to here, and then we must go here, here, and down to here. And if you remember, it's not on this chart. It's on one of the other ones, but we added some risks down here. I used language to the tune of, if you've never owned Bitcoin in your life, you might want to add some. Certainly happy to add here. I think on that day I posted the chart, what's wrong with this chart or whatever it was. Yeah, if you see me put that up on Bitcoin, you know the answer is nothing. Maybe it was there, I don't know. And it's still fine. So happy holder there. Next high close, plus 1/3 FRP on that. That's a standing order until you see something that's looking species ending. Let's head back here, get to the next one. Which is Wisetech for Sue. WTC. Did I put this in? I didn't put this in. I put in something that looks identical to this Sue. So I put in a GMG. Have a look at this. Wow, check that out. WTC. And I didn't put that in, but I did put this one in. Bit of a specky. This is almost aggressive for me, really. I mean, that's how I view this one. But it does have an amber thing there if you can find it. Otherwise, it wouldn't have come up on the scan. But we certainly have this. So I know we digress. We have our rising peaks and rising troughs, and we're moving back to a predominance of demand-side candles. It's a punt, and we're definitely going to make one-to-one into our big supply zone up here. It's not a problem. So that's a bit of a punt. The reason why I mentioned that one, Sue, is I think it looks very similar to yours, but maybe GMG comparatively is a little bit better. And this is splitting hairs. I think this has actually got better price action. So this has got better price action through here. In fact, far better price action than GMG. GMG's not bad, but I think this is better. But I think GMG pipped it today on the candle. And a few of these other candles here, which are a little bit disturbing. So why are these little black ones sort of lurking around? And even today, look at that shadow, Sue. What's that telling you about supply that's just sort of lurking in the system? Whereas if we go to GMG for the compare and contrast, got a few more white candles, high close today. I think there's fewer impediments on that one. Now, I'm not telling you to do GMG over Wisetech. I'm just trying to illustrate why I'm not as keen on Wisetech. Okay, so that's a pass for me, but it doesn't mean that it's not very close because it has a lot of the other stuff going on. I wonder if we're not quite amber here yet. I know it's a bit pedantic, but just another candle or two I think would be worthwhile waiting for. That's my opinion. Okay, let's keep moving. Andrew's got uranium stocks, movements, ASX and US moves, thoughts on Atom, which has been in the list a couple of times, ATOM. I ran it, I didn't run it there, that would have been good. No, I think I ran it on that day, I ran it today. And so these are still buys for me. They're still plus 1/3. And some people might say, "Carl, you can't buy that now, it's gone up too much." That's just not how my model works. This is how my model works. I was happy to buy it yesterday, I'm happy to buy it today. We don't care about points of supply on here. They're irrelevant because it's an ETF. Okay. So what we say, discard this. What's the right word? Discard or disregard. Disregard. We'll go with discard, it's shorter. Because it's an ETF, okay, because it's made up of a bunch of stocks that have their own points of supply and points of demand. So happy to add on that one. Boss Energy, we talked about DYL. I think today's upper shadow just keeps it out, but it has been in fairly recently. Paladin is still a no because of the long-term downtrend. BMN is looking better, much closer to a turnaround setup, but not quite there yet. And I can't think of any other ones, so let's keep moving. URNM, I'm guessing is going to be similar, but not quite a turnaround setup yet on that one. I think I've done all of those. I'll have a look at US ones later on. I need to pick up the pace. CYL. I think we're still okay here, Michael. But what do you think about this candle? That's a bit nasty, isn't it? That's a bit pointy. that's a bit pointy. If you did a third on that one, I wouldn't blame you. There was a capital raising here, but I think it's actually been very well absorbed by the market. So what mining stocks do, of course, is if they go up, they raise capital, especially if they didn't have a lot, because you don't know when your stock's going to be up ever again. So by default, if you manage a mining company, you're the CEO, the stock goes up, you raise money, right? These guys are actually, I think they're doing it for a good reason from what I've read just at Market Index and doing my Market Index stuff, not because I care, right? Trust me, I don't care. But yeah, I think if you did a third there, I wouldn't complain. Today, it's very close actually to adding a third back. And I've said this in a previous scenario, because of the severity of that supply, I will tend to require more evidence that the demand side is still in control. So not a lot has to happen here, but I think just even one more candle would do it for me. Certainly one that closes a good chunk of the way into that supply side candle. So it's very close. Next high close plus 1/3, plus 1/3, missed plus 1/3, but sort of a decent way into supply side candle. Can we say that? Okay, but otherwise, also I think for FRP and what you got. All right, SX2 also for Michael, and I think this is fine. It's getting a little bit tedious up there. Is that the right one? Yeah, that's the right one. SX2, but it's fine, absolutely fine. I think it's probably just a matter of time until this one breaks out. But there's nothing telling me that I need to have anything but FRP there. So let's just write that on screen. And if it helps, NHC plus 1/3. Okay, let's go to Michael SHG, which is not that one, it's that one. I still think we're okay here. Not ideal, but what we do have is a check candle on close and assess for potential minus 1/3. Look, let's just go ditto. Right, let's just take that and let's go ditto. What we do have here is, let's just move that. Let's just go down there. At least we've got a really clear line in the sand of where we absolutely have to act. This is not ideal. That's the real issue, isn't it? That candle there. But today it seems to be holding well. This is the key candle to the demand side. So as long as we're above that, I think we're okay. It deserves a little bit more room. But beneath it, however, I think we're starting to take some fairly decisive action. Okay, Andrew's got, anyone know why I can't see those scans? I didn't receive an email. Big picture stuff is important. But I'm not sure which scans. Maybe somebody else might be able to help you on that one. Bitcoin further adding along. Happy with Bitcoin? Hayden, yes. John, can you please review IPX? Now, this has been a little bit of a conundrum for me, John. I must admit, I don't know. I haven't called this one very well. I wouldn't say I don't know what to do. I know what to do. I just might not call it very well. So I think I put it in here. I think I got a little bit excited, didn't I? On a turnaround setup there, did I? I couldn't have, because that's not ready yet. Maybe I'm thinking of something else. But we're better now, so we know that. We've got a light green there. We have got a dark green here, so that's good. And we've got a little bit of an intraday dig, don't we, into that long-term trend ribbon. Today's shadow is not ideal, but I think everything else is there. Okay, double check though, John. Make sure, because we're going to have a little bit of an issue into here. That's a pretty solid supply zone. Hopefully you'll agree with that. That is a solid one. And just making sure that on the, I'm just going to put question mark here. Question mark next high close plus 1/3 if it happens. This is what you want to do. FRP certainly, that if you've got it, but just making sure we've got 1-to-1. So just 1-to-1 min question mark. That's all. But yes, it is a setup contingent on that candle. Yes, that next high close. Okay, and your next one, EVN, which we have discussed. Very happy still with that one for continuation play. LDR for Perry still looks very good. Lode Resources. Let me zoom out. No complaints there. Let me keep zooming out. And just keeping an eye on that point of supply. There is potentially also a little one here. Doesn't mean we're getting out at these levels. It just means we're watching very closely to see if supply manifests itself. And I'm going to put to you today, there was no surprise that we saw just a little bit of supply in there. Okay, that's all. But I don't think it's a big deal. Happy holder. Next high close. also, if you get it. So let's go in HC this time and FRP and keep moving. Thank you, Perry. And turn around. I think you've typed the same thing twice. 6.5, 7, but building. I think we've got some scores from a previous discussion. Droneshield, 2 thumbs up. Priceless analysis, 2 thumbs up. Thank you, Ross. That was good. I'm glad you enjoyed that. BBT, I like the look of that one. Thanks, Jackie. Yes, nice. I think that made the list tonight. Not just made the list, it made the feature chart list. There you go. They're the feature charts. Now, I won't go through them, or will I go through them? We're so short on time. I don't think you can fault the pedigree of that one. I just don't think you can ignore it. That one, just beautiful uptrend, isn't it? Just very simple. Big volume today. I'm not sure what's going on there. APZ, again, just pedigree. It's just in on pedigree. This is an interesting turnaround play. How come nobody's asked me about this one yet? Nice candles. Lots of white candles there, holding of the short-term trend ribbon. Everything's turning around. Strong motive phase, 170 to 230. Shallow pullback, relatively speaking. I think that looks really interesting. Atom was on the list. BBT on the list, as we said. Brambles, just pedigree. Just an obvious one. COG, well, that's a nice little... well, it's not turnaround, it's continuation, but it was a turnaround. I think I started putting it in all the way down here, if I'm not mistaken. EDU, illiquid, isn't it? But anyway, it's made the list. ELS, just a monster. What can you say? Look at that thing. EOL, and some of you probably already on them and don't need my opinion because it's pretty self-explanatory what we're doing, isn't it? NST, there isn't a single one on this list that is on here for the first time. Many of them have been on there several times. Let's go, but it's a yes for me on that one there. Jackie, they're going to Peter, CEL, which is not ringing a bell. Let's go CEL. Which is not that one, don't worry, don't panic if it's not. Oh, yes, okay, I do remember this one, Challenger Gold. We have looked at the past. I think this looks really good. I reckon the only reason, there you go, minimum turnover 0. Look at that. So that's the only reason why I didn't make my list. But if this had made my list, if it had the right turnover, the minimum turnover, this would be a plus 1/3 and pretty close to a feature as well. I like the shape of it. I like the turnaround setup. Very easy for me to copy paste from last time. Thank you for that one. Peter, WIA, yes, was on that list. We talked about it. We'll look at the US one in a second. Mixed candles. Roscoe talking about one for boy. I won't be able to see it, Ross. That's the problem because I'm up the top of the list and you're writing down the bottom list, so it won't be until I get down here to do it. We'll do the thumbs up, thumbs down. I think that's the best way to go because at least it's instant and then it doesn't impact the scroll down. And we're getting pretty close. There's Andrew's things. Perry's got some US ones. We'll catch on the way up. Riding up a mountain or climbing rising peaks. Yes, that is definitely the case. Let's go GMG. Michael, done that one for you, hopefully. Yes, plus 1/3. If you don't believe me, I'll just put that on screen. Copy that, so we don't need 2/3 risk position over there anymore. And we'll go NHC plus 1/3 and FRP on that one. Just so that we know what we've done for next time. And I'm a multi-day hiker. Oh, somebody was talking about Roscoe's riding by cycling up the mountains in the rising peaks. Yes, I get it. Very good. The multi-day hiker and been French and Swiss Alps. My favourite hike. What's your favourite hike in the French Alps? Here's actually a great opportunity because we're about a month away, ladies and gentlemen, from June 28 to July about 28, give or take. I'm going to be in Europe with my family for a holiday. We're going school holidays. We're starting in Italy, working our way up through all the major towns, then going to the Dolomites, Peter. Going to do Trecime and a few of those. Then I'm going to hook around to Lake Como, head to Grindelwald, Zermatt, Chamonix. Unfortunately, it's a very short trip, so I can't do all the stuff I want to do there. And then we're heading up to Paris for the last bit and then coming back out. So there won't be any webinars for a few weeks, in a few weeks' time. Just worth putting that out there. Is it the Col du Vanoise or there's a Col du Vanoise? That was my favourite hike in the French Alps, but we are digressing. Okay, Mont Blanc is beautiful, Peter. Let's go to the US stuff because it's starting to sound like travel guides, isn't it? let's head over here and finish this off with all the US ones. And this is where you hear me pause a bit and try and find my spot, because now I have to find just the US stocks heading back up the list. And yes, we got one here, LYG from Perry, LYG, which is Lloyd's banking group. A lot of banks have been coming up. Oh, just amazing. Look at that. What is it about banks? And look at very limited impact in that sort of Trump trade war crash there. This is amazing, Joe. This is so strong. I really can't fault this. Let's head over to the weekly chart, because we just want to see if there's anything out the corner of our eye there that might be, it's blue sky as far as we are concerned. Now, if I keep scrolling, I probably will, knowing Lloyd's, because if I go back to the GFC, okay, see that? I lived this, all right? I lived that. I was managing money, other people's money during that process. So, yes, I knew Lloyd's was going to have a past, but it's so far back, and the idea is it relevant? Well, only if you think there are people still hanging on from 2008 that are waiting to break even. I don't think that's the case. I think many people have passed on, if you get what I mean, in that time. People aren't waiting. That's how long time has passed. I'm not trying to be flippant here, but people aren't waiting for that anymore. So we go back a few years to that weekly chart. If we can't see it in the weekly chart, this is the point, it doesn't exist to us. So there's no overhead resistance here. All I can see is double green. All I can see is great price action. All I can see is a predominance of white candles. And I want to draw your mind back to this idea we had before, is giving things a score out of 10. And often what happens in these webinars, we trudge through the trenches of the ASX, getting 6s and 7s out of 10s. Maybe we might get the odd 8 out of 10. Then we get to the US and Perry gives us 3 or 4 10 out of 10s, doesn't he? So this is, for me, I can't fault it, 10 out of 10. So that obviously means that we don't need next high close. It's just straight up plus 1/3. And then FRP if you've got it. Now, obviously, Carl has said, it's 10 out of 10. You run out, you buy it, and the next day it goes down, and the next week it goes down. Hey, I don't know the future. Okay, I don't know how the news is going to change. I don't know how the supply and dynamics is going to change to turn things around. I don't. But what I can say is at this point, everybody wants to own it and nobody wants to sell it, and that's because they think it's a good stock. I don't know what they're going to think about it tomorrow. That's me covering my assets. Okay, let's click save on that one. And head back up. Thank you for that one. Perry actually's got one more there. Phillip Morris, if I'm not mistaken. Let's get rid of that and get rid of that and escape that, and hopefully that's going to come. So disclaimer, if you've got any ESG concerns about what these guys do, we should all be aware of what Phillip Morris does. Wowzers. Perry, have a look at that. My mind boggles. What are they selling now? They're selling vapes or something. Have they switched? What are they doing to look that good? So assuming you don't have any problems with the fact that their product kills millions of people around the world every year and has killed tens of millions of people, probably more, in the history of its existence. If you don't have any problem with that and all you care about is profit, you greedy capitalist, then this is a very good chart, isn't it? Plus, the 2 there, plus 1/3 FRP. Amazing. And who am I to say what your sensibilities are? You can do whatever you want. Let's go to... Trying to find where I am. Okay, that's where I am. Okay, going up the list. We're not far away, everybody, because there weren't that many US ones. But I do have to pick through and find them. And if I miss one, I'll ask you to give them back to me again at the end. NNE. Here's the next one. It's uranium stock. Nano nuclear energy. Actually, I think that looks really interesting. Bit of a turnaround setup. I love that big white candle. Looks fairly new as well, and I like the fairly new ones because there's not a lot of hang-ups in the market. There's a lot of history. There's not a lot of, it'll never get to there again, or it shouldn't be there. Like, people are open-minded on these. I think it's really interesting. I think I'm happy to have a punt on this, and I would go into it thinking, look, it's a bit of a punt, eyes wide open, but otherwise, I think that's worth a bit of a crack there. Thank you for bringing that to my attention, Andrew. SMR as well, another nuclear power, perhaps nuclear, I don't know, Nuclear Power Corporation, whatever it says in the name. The only thing I don't like about this one is a little bit of an upper shadow, but it's tiny, isn't it? I'm going to go ditto. Let me just double check out the back there. That's fine. I mean, once it gets past here, I mean, it's still like the reason why you've got this shadow. So you might take a point off it out of 10 just for that shadow. And that's kind of order of magnitude where I am. But I am understanding why the shadow's there. The shadow almost has to be there, doesn't it? Because of this. But otherwise, it's a very strong candle. If you prefer, if you're not sure about that upper shadow and the supply, and the fact it's representing supply manifesting in the market, you might want to wait for a next high close. Okay, but otherwise, I can't see why not. FRP certainly, if you've got it, click save on that one. And I always lose my place after I do that. We're heading back up. Rupam has got PLTR, of course, the artificial intelligence company. PLTR. I still think it looks fine. Yeah, I mean, I remember it had earnings, so that must have been the earnings. A little bit of a nervous moment for you, but just come back very well. Look, not perfect price action over the last few days, but the Nasdaq has been far from perfect as well. So I think this is still holding up pretty well. Obviously, we're not adding risk right now, but I can copy that from before and just modify it a little bit, and certainly say that next high close, I wouldn't have any problems on this one to go, plus 1/3 NFRP if you've got it. I think that will update. There we go. And we're going to do ALAB, which doesn't ring a bell, Astera Labs. Yeah, I think so. I can't see why not. A bit more of a turnaround play, but very, very solid candles here. Sold the candle on Friday night in an otherwise down market. In fact, the market has been terrible over the last few sessions, and it's held up pretty well. I don't have any problems with this. I know there's a little bit of an upper shadow here. Okay, that would be the only thing if you want to wait for a little bit more of a close into that. I don't think you need to. So, yeah, I'll go happily plus 1/3 here as a turnaround setup. Remember, I like to get the mix of setups in as well. So we'll do that. We'll click that save on that, and we'll do your last one, Rupam, Google. Of course, everybody will know. Alphabet is the parent company. Is it a turnaround setup? Not quite yet, because we don't have that short-term uptrend ribbon, but it's not far away. So, you know, you watch it during the week. Every chance it does get the uptrend here. Everything else meets the criteria, and then for me, it's just the next high close. Okay, I won't write it on because it's not meeting the criteria yet, but I think you're more than capable of handling that one yourself. And that gets me to the top. I've got to do Adonis, and I think we've done Nasdaq 100, S&P 500, UK 100. I didn't do the S&P 500, so let's see what we've got here. I don't think it matters which one of those we do, so I'm just going to pick one. Maybe it does. Look, ditto as the Nasdaq there, Adonis. I don't think there's much difference in the analysis on that, and we did do it. The FTSE, we did do the Nasdaq. And Phillip Morris, actually, you picked up on that one as well. Well done. So great minds thinking alike there. I'm pretty sure that gets me to the top. I will scroll down the bottom just in case I missed one. Peter's got EGO, so let's check out that. Eldorado Gold, keeping the faith on gold. Certainly better than me. I think it's fine. I think it's still got some of these lower peaks issues, but it's come back well. No, it has come back well. Let me go out here. You can tell by my voice probably I'm less keen on this one as some of the other ones. That's fine. It's all good there. It's all checking out. I think it just comes down to how much gold exposure you have, right? If you're seeking more gold exposure, I thought Evolution probably looked better than this because it has broken through, but this doesn't look bad at all. Okay, so I'm okay with it. I don't think I need to wait for another candle. I think it's close enough. If you want to, look, let's go next high close because there's a little bit of a black candle there, and we do have 2 points of supply. So let's just be a little bit more conservative and then do it that way. But otherwise, yes, I think it looks fine. Yes, exactly. That's what you say, Peter. You've said the same thing. And GME to finish us off, and then we are definitely done. GameStop Corporation, of course. Oh, fuck. Sorry, I dropped the wrong word there. Didn't mean it. But what was last week? I was saying that Roaring Kitty is all but done. And look at that, last 2 candles there. Am I going to be on the same side as Roaring Kitty? Am I going to be on his trade? It's a yes from me. Yeah, definitely yes from me. Yeah, 100% plus 1/3. NHC, I've just helped him along there. Okay. Thank you for bringing that to my attention. Who was that? Andrew, you didn't catch the backstory because you're new today, but there was a backstory with that last week. We looked at it last week. Okay, let's head back here. And we're going to just read the disclaimer one more time. As we do, just a reminder that everything we discussed tonight was general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. You should consider it very carefully or seek the help of an investment professional to determine its appropriateness for you. You're going to lose money, whether you're following me, you're following the Twitter or whatever it is, TikTok or the chat room. You're going to lose money at some stage. Get used to it. Learn how to deal with it. Trading and investing is risky. It's always you who decides what you do with your money and not me. Other than that, it's been a pleasure chatting with you this evening. I had fun tonight. Hopefully you did. Hopefully you people got the hang of how it works. If it seemed a bit too much, the great news is this session's being recorded. I'll do all the timestamps for you, so you'll be able to click on anything you want to go and revisit, and it'll be up there on YouTube very, very soon. All the best for your trading and investing. Till we catch up again. Bye-bye for now.